insights and valuable information. Okay, ladies.
Good morning, everybody. Julie and I spent some time putting this together, but I'd like to give you a little background on how we ended up with both this presentation and the marketing presentation. I have quite a few Fortune 100 clients, and a group of us put together some pro bono work to ideate with different organizations to help them through this crisis, mostly with the high beams on what does it look like on the back end. And they came back to us, to a company, and asked us to focus 100% on small business. And their business is dependent on small business being successful, and your business and all of our businesses are needed for it. So I think the nice thing about this effort that we're trying to work with businesses on is everybody's rooting for you. So with that in mind, Julie and I will go through this. We've split it up, and then we'll do questions. On Tuesday, we did a lot of Q&A, so we're happy to do that at the end. So the first thing that I like to say is the third comment when I'm sitting down with a CEO by themselves, just ideating on what does this look like. It's really important to define what success looks like coming out of this. And for some people, success might be break even because of how bad your business was disrupted, or something like that. Some might be a modest profit, but it's pretty much anybody running a business knows that reality is really, really important. So if you can work backwards from that, that's really what is essential. Julie will go into assessing some of your risks and looking at different things that will size it. But the number one thing is cash is king. So that's why the government did what it did. We'll get into that in a minute. But really look in the mirror, have that conversation with yourself about what does success look like? Because if you can keep the majority of your infrastructure in place, there is going to be a turn. This is the fourth recession, depression, whatever we're going to call it, I've been through in my 20 years of running my own firm. So the first time I panicked, I was young. The second time, a person that had grayer hair than me sat me down and gave me these little tidbits that I'm about to give you. And they were right. It always turns around. It does look different, and you have to adapt to the changes that are necessary. So our comment on cash is king. There's a couple of things here that I think, you guys all do. You evaluate credit. The banks are going to be calling. The first thing the banks were doing was calling on PPP. Explore alternative credit. There's an enormous amount of cash out there with VCs. I am not a big VC fan for financing. And in some of the businesses that I mentor that are heavily equity funded, I've told them it is so important to have a relationship with a bank. And in this PPP funding, the people that didn't have relationships with bank are having the hardest time. So talking to your banker, walking through it, the banks are highly incented to make you successful too. But if you don't have a successful business plan, they're not going to take their time. But they don't want to see a successful business fail either. Maintain as much of your infrastructure as you can. There's a lot of ways to do that. In my past, and in a lot of companies that I've spoken with in the last 2 weeks, you might take the top management's comp down. Most people haven't touched anybody below $65,000 or $70,000 a year. Just try and keep them maintained. Maybe push vacation time, get some of that stuff off your books. But try and keep your good people. That doesn't mean you don't take an opportunity if you've been trying to make a change. But your good people, retaining your employees are so important for when the turn comes, because if your infrastructure is in place, you're the first place customers are going to go. Again, what does success look like? Reassess your business plan. See on that business plan where you need to make some changes. You guys are all in the network. If you want to talk to me or Julie, we'll do it. You want to bounce it off on us? There's no problem on that. And then assess the demand for your products and services. You see how fast the economy is changing. The grocery stores, for example, they're going to have to do deliveries after this. This isn't going to change in June 1st or July 1st. There's a whole population of people, they're going to get their groceries delivered from now on, and possibly takeout food. I'm using those two as examples because they're simpler. But for example, in my business, I had road warriors, which we talked about on Tuesday, that were on planes all the time selling, talking to their customers. They're still selling. They're doing it via video. And guess what? Customers aren't paying for travel, and neither am I. So if it was a sales call. So the one note I made on here afterwards is there are some nice surprises. I'm on a couple of boards, and we're in urgent mode. Obviously, one of the boards I'm on is a university board. In the first week, we looked at, I call them fence posts, the worst scenario and the best scenario. Should the students be able to come back, not come back? We had to refund food. We had to refund housing. Obviously, students are waiting till the last minute to commit, so you can't do your teacher contracts. You know, there's just a whole host of things going on. One of the things that came at the close of the first month was all this SG&A savings. So that's money we can put right back into the business, and we can help with tuition, or we can do housing differently. We can do marketing differently. So you will see in a good solid look that there is some money saved during this downturn. And at that point, put that into your business plan to spend to the success. Why is the government providing this relief? I don't know if you guys saw this, but Gail Boudreaux was in the White House on day 2, which my mother took a picture of and sent to me and told me to tell her that her hair and her outfit were gorgeous. But the Fortune 100 were in and out of the White House in the first couple of weeks, and they all asked for small business funding. They were not the first ones to get relief. If you look at their business models, insurance in particular, if 50% of the companies and people insured are provided, the insurance companies, that is their most profitable base of customers. And I say that not from a pricing perspective. I say it that large companies tend to self-insure and only buy different services from insurance companies. The same thing with the telephone companies. If you look at, and these are some of my clients that I'm talking about, but if you look at where they make their money, they make it B2C and B to small business. So they are desperate to see small business succeed. There are a lot of business reasons why this program was put in place. If you look at Canada and 2 of the European countries, they put, instead of doing all this banking and everything else, they just sent all of their corporations that paid taxes 8 weeks of payroll and deposited it into their bank accounts. So there was no applying, there was no nothing, and there was a belief that 8 weeks was enough time to kind of get us through the hump and prevent this from becoming a catastrophe. In the US, there's a lot of money rolling around here. It just has to get into the right hands in a timely fashion, and then we can measure whether or not it's been successful. So it's a little early to say that it's not working yet. Let me see in here. All of these things that we have on here are very important. It's our minority and women-owned businesses. Women own a ton of small business. The GDP is, Julie, is it in the 40 to 50% range, I think, which is huge. The other thing is, over the last decade to a decade and a half, a lot of the Fortune 1000 companies have used small businesses to reduce their fixed costs into variable costs utilizing small businesses. So they become an integral part of the supply chain depending on what they're doing. So there is just a lot of reasons why the government provided this relief. This is the last page I'm going to cover, and then I'm going to hand it off to Julie. But one of the exercises that many of my clients did, both large and small, was, and they did this over a month ago, as soon as the CARES Act came out, is they looked at the unemployment plus the extra 600 or 300 if you're part-time, or underemployed. You take people's hours down, they can still apply for this. And it's really important because this helps everybody. This is like what I would call the safety net of the PPP. So before the PPP came out, many of my clients were like, I'm going to give 60 days notice, I'm going to furlough, I'm going to do anything I can. But if you look at this hourly rate, what they were making and what they could make, it helps you make a decision to furlough or not, because your employees at this rate will be cared for at 100%. So it is a good exercise to go through. And furlough means that you will carry insurance, but their unemployment will take care of their paychecks until you bring them back. I think on this page that it really applies to people that are probably in the $60,000 to $70,000 range. But being a call center, we have a huge call center practice. This was done by almost every one of our clients that had call center reps, and almost every one of our clients is down on calls, like not 5% or 10%. I think the smallest I've seen is 40. So you can't keep people sitting there in 40 for 40% of your call volume being down. We do have some businesses that the call volume's up, but it wouldn't surprise you. It's financial services with lots of 401k. So people have time to focus on their retirement accounts, and those are our clients that are completely swamped. So anyway, this is one exercise that's worth doing if you haven't done it. I'm going to stop there and hand it off to Julie.
Great. Good morning, everyone. Nice to see everybody. Hope you're all staying well and safe. I was asked to participate in this. Is of course one of my areas of expertise, but in particular, as you know, I like to reframe things as around a positive a narrative as we possibly can. So pivoting off of Therese's theme of cash is king, I was really excited to be able to talk about this because I see that there has been a knee-jerk reaction, as Therese alluded to, with respect to the onset of the impact of COVID, is for everyone just to save their way through the crisis. And what I want to encourage all of you to consider in working with your small businesses that may be customers or clients is to consider the fact that this is also an opportunity to revisit the cash inflows side of the equation. So I want to share some just best practices, tidbits, tips. This is not meant to be comprehensive in any way, but at least things that you may have already considered. Would love to hear if you have others to add, because we want to keep this a working document and share with the rest of the membership. But with that, kind of starting out with inflows, let's take a look first at what your sources of cash are. Cash is king. We know we have to understand costs, and we're going to get to that in the next slide. I'm not discounting that. But first, let's look about what cash is coming in. When the times are really good and booming and businesses become too busy, they tend to take their eye off of accounts receivable. This is something as a CPA I was raised on. You watch your days sales outstanding. If you're extending terms, let's just say for practical purposes, 30 days are your terms. It should be something that you're monitoring regularly anyway. But now of any time is when you need to be very deliberate in terms of reconciling and pursuing those clients that have extended beyond 30 days. So it's a time to really dust that off, refresh it, and really try to collect as much as possible. Now on that, there's other ways to accelerate the inflow. You might have been paid by checks in the past, and I realize this sounds like a mundane detail, but you can work with your bank to receive your remittances electronically via ACH, which means you have access to those funds that much sooner. Put that money to work that much sooner. So something to consider there. Another option is to look at, with respect to receivables, will you be willing to consider taking a little less if they pay you sooner? It's a common technique, early payment. If you pay me faster, I'll give you a couple percent off the top or whatever. You'd have to analyze what feels right for you, what's doable. But those, again, we're trying to accelerate the actual cash in the door versus sales that will collect in the future. So just wanted to share those. To me, it all starts with managing the receivables. So as a starting point, as you see on the left, let's review all the sources of your cash. Understand your customers. What are other sources? You have investments. You have some capital and debt we'll talk about as well. So with respect to investments, let's understand the liquidity of what you have at work. Are you looking at perhaps drawing on some of those investments in a more accelerated manner than you may have planned? I think that needs to be a deliberate analysis. We're not looking to shoot ourselves in the foot if those investments had been performing highly. Markets are down right now. If you bought high, you don't necessarily want to sell low. Another inflow source, your credit sources. As you know, when the quarantining really started kicking in, there was a huge rush with businesses to hoard cash. They were maxing out their credit lines. They were chasing down any business opportunities, alternative markets, private equity, PPPs, what have you. I think this needs to be, again, done judiciously, but you may want to take a less conservative stance, especially if the money's cheap. That was the attractive nature of PPP. Even if your loan is not forgiven, it's still 1%. And that's some pretty darn cheap money that you could otherwise put to work. So other considerations to consider. The last item is really around new business. And this gets back to what are the changing needs of the customers and clients? Does this actually give you a window of opportunity to innovate? Maybe we couldn't help this organization before, but boy, we have something that can be tweaked and we can optimize. You hear all those feel-good stories about the Taco Bell is now, they're all sewing masks in the store, whatever that commercial is. That's one very simple example, but make sure that your services and products are timely in that they're taking advantage of this need as it exists now. Again, to accelerate ultimately the cash inflow. What you really want to have out of this, both inflows and outflows, is to develop a cash forecast. I can tell you, our firm works typically with Fortune 1000 companies, very sophisticated environments. I still am surprised that many of them do not have a cash forecasting tool that they can really rely on. There's a lot of back of the cocktail napkin type analysis. It's important to understand where the money's coming in and where it's going out, and also make some assumptions. We may not know every number exactly, but at least we have directionally, we understand where there's opportunities and where there's risks. So this kind of lays out some of those general suggestions in starting on the inflows part of the cash forecast. If we could advance to the next slide, I'd also like to talk now about the outflows. So in terms of starting out, as I said initially, it was the knee-jerk reaction, everyone just to stop the bleeding. How do we cut immediately? And I'm suggesting to look at both sides. First of all, we have, just like we took our inventory of sources of cash, we have to understand what our options are on the other side of the world, and understand where do we have flexibility, where are there triggers, what timing, etc. So I want to talk through some of the most likely areas that may have opportunities for you. Certainly on payroll, Therese touched on many of them. We have clients who have deferred compensation increases, they've deferred bonuses, or they've already announced they're not paying bonuses. You can evaluate all those options and prioritize them. Maybe we don't jump to the worst possible scenario initially. Looking at vacation time. For us as a professional services firm, if we know people will be on the bench if projects are put on hold, let's ask that they actually consume that vacation time now. Many of them welcome it, I will tell you, when they have young children at home and they're trying to be part-time e-learning, sponsor coach as well as working. You can look at scaling back the work week. You can look at temporary decreases. You've seen many of the major organizations announce some pay cuts. I think it's important on that to understand what that message sends to not only your customers, but to your internal staff. Again, as a people business that we're in, I'm very sensitive to any of these announcements in terms of what it might impact on our morale. We want to project that we are a healthy organization. Our clients still believe in us, and we want to believe in our best and brightest staff. We view this as an opportunity. If you're on the bench, I want to invest in you. I want to get you into that training that you never had time for before. Those are ways to boost morale. Okay, so back to the spend side of outflows. Looking at your 401k match, we've had clients, we're doing a lot of data analytics around payroll spend right now. You typically are making a certain percentage. You can review your 401k plan and look at what flexibility does it allow the business. Does it require you always to pay the full percentage match, or is it a range? Or does it allow you the timing? Some contribution plans allow you to pay only at certain milestones or year end versus every pay period. So again, we're not eliminating the 401k benefit. We're more changing the timing of the outflow. What else? Maximizing workforce utilization. This is about, I think of, if you use it technology terms, load balancing. You have people who are going to be crazy busy because of those clients or services are needed, others who aren't. Again, are there retraining, cross-training, cross-pollination opportunities there? And really going into reallocation of the work and absorbing those losses. For us, again, just sharing personal anecdotes, I find hopefully is helpful for you. I want to make sure that our best staff know that we don't want to lose them, that we are sticking with them. They've been loyal to us. We have very high employee retention, and we want them to know that we're going to keep them busy. If they're on the bench, they're doing other special projects, researching new services, anything, offering perhaps some pro bono work to demonstrate or pilot a new service offering that we haven't yet stood up. So I think it's an important way to look at, if you, let's say these businesses are able to receive PPP funds, you still have the question of what are these people doing while you're paying them? So why not use as an opportunity to improve them in terms of that will increase their productivity once you see your business pick back up. So hopefully it's helpful in payroll. There's a lot of other options there. Furlough versus layoff, we've talked about a little bit too. But I think there's a lot of other things that may not be as obvious that may give you some initial cash relief. Accounts payable, lots going on there. Just like on the receivable side, now we're on the other side of the equation. Can we ask for extended payment terms? I think it's always better to approach your vendors rather than just saying we're not paying anyone. Ask them, can I pay you less, but pay you over a longer period of time? People are anxious to get some cash. There might be an opportunity for you to renegotiate things as well. Looking into your contracts for everything from your lease agreements on your rent. I heard this morning, I think it was, Lori Lightfoot has made an appeal in Chicago to landlords to soften up the rent due in short order. I'm not sure if that's just for personal household or also for office, which will be feeling it as well. Insurance, there's opportunities to reduce your short-term insurance spend at the very least. You may have staff who's traveling all the time and now they're not. That might be a short-term impact on your insurance coverage. I know personally for auto, if you're not traveling right now, the auto insurers are giving people a break on their premiums. Again, all of this will add up. Taxes, it's already been announced that income taxes, you can defer your payments, whether they're quarterly estimates or your annuals. look into the different jurisdictions, states in which you operate. Again, trying to optimize cash on hand. I'm not saying you'll be alleviated of your tax obligation, but again, you may be able to defer it. Lots of other opportunities there, but I'd say in times like this, if there's a contract in place, it's a starting point for negotiation. It's not an absolute. And your other parties, your partners, your business partners you're working with, they're looking to optimize cash too. So it may be that you can find a nice middle ground that will be mutually beneficial. Other things in terms of other spend, you talked about the upside of some G&A. You're not traveling. There's other opportunities. I think it's going back to really right now, you have the chance to evaluate where you are spending some of these discretionary dollars and what is the value, what's the return on that investment back to your business. It's even a time really to look at the profitability of your customers. You might be thinking we have large volume, this is a great customer, when in actuality, when you look at margin, you're actually losing money and ultimately, draining your cash reserves as well. So what I like to think is this gives us the opportunity to look at things a little closer that might have gotten a little brushed to the side, during the boom times when things were going great and, hey, I'll check my receivables and my day sales outstanding later. This is the time to really get back on top of that. If you could go ahead to the next slide. Last one is risk assessment, and this is really a wraparound in terms of understanding these components and how it might affect your cash inflows and outflows, and even your operations as a whole. Certainly understanding overall business conditions. What opportunities does it present? What risks? Are they high, medium, low? This is like a little scorecard maybe businesses can use. We talked about adjusting to the changing needs of a customer. The supply chain risk, I thought we saw that obviously in, with downturns and crises, you expose weaknesses. And we certainly expose weaknesses in our supply chain here. We're hearing it before it was masks and PPE, now it's food. Around the chicken and beef industries in particular, agriculture, it's going to be very interesting. How reliant are the businesses on overseas manufacturing? You mentioned universities. I work with a major university and they have a large international student population. They're hearing the Chinese students aren't even going to be able to re-up their visas until November. So they're pretty sure the kids aren't even going to be back until 2021. Another risk assessment key, not just in a downturn, but important always to assess your customer's ability to pay when you're taking on new customers right now. That may be something that, you still need to stick to those business basics, do your due diligence. Do they have a Dun & Bradstreet rating or however you're assessing to make sure, particularly if it's a large order or a large service you'll be providing.
Julie, can I add something? I don't know if I'm allowed to interject, but
yes, please.
And that sort of, hey, one thing I think has been interesting is we're B2B as well. And usually we look at that as, oh, they're risky, they're young, they're not, it's more about their financial stability. What's been interesting, I probably have $8 million of aged receivables from companies that are getting choked around the world where their accounting teams are. So two really large companies, I won't name them, you would know them, they can't get stuff paid because their teams are in India.
Right.
And so it's not that normally these two companies would never be on my list of risks for ability to pay, but it's an ability to pay because of where their teams are located. It's really interesting because I would have normally not had to worry about that one. And now we're going back through our clients to go, wait a minute, where are their payables teams? So interesting.
I thank you for raising that because a lot of the offshore, typically the accounts payable operations have migrated to those offshore areas. And in terms of automation, that was always their business opportunity. That's why they're there. And certainly the risk that presents. So I think that's going back to say, are there other mechanisms for them to pay you outside of the traditional invoicing? Even taking on new clients, or perhaps in this is, we want an advance. to fund upfront those payables that are yet to be dispersed. So mechanisms like that, again, looking outside of just the regular, I invoice you and you pay me. So thinking about their ability to pay, not just do they have the financial viability, but the literal, do they have the ability to cut the check or make the ACH transfer in this case? Hopefully you're getting paid electronically. Other things, I think this is interesting in terms of risk assessment. As I said, the downturn exposed many things. What we saw clients, it really exposed a lack of business continuity planning. I think many checked the box. They had disaster recovery plans. Maybe they weren't really tested, but true business continuity where they understood their customers, their ability to procure raw materials, their ability to keep their labor pool active. It really exposed those things. So I think that's in particular has been a painful learning experience. But again, I like to turn into an opportunity that needs to be assessed. But even in you're thinking about how the people you're working with, I think those are questions that need to be assessed. What is your BCP plan? I think also to expose, again, what we saw with our clients, suddenly people had to work from home. I found this an incredible study of human nature. We had some clients who had always been very comfortable working from home remotely on occasion. We actually had 2 clients that prohibited it. And for the first time they were at home, and it was so disorienting for them how to set up literally conference calls. I had a client call me and ask me the dress code for a video chat. I mean, just outrageous considerations. There wasn't a, oh, here's how it works. Let's just jump in. And it exposed security concerns. You heard about, this has been unfortunately an accelerated time for bad actors, for hacking, for fraud. You're going to see an increased incidence in terms of intrusion and, the emails of, hey, I'm your boss and please send $10 million, all those emails. So it's, again, understanding that risk on your technology. Is it opening a door, exposing your business or your customers' businesses? And then the last item I really wanted to comment on, because I don't, again, putting my financial hat on, financial compliance is something that it has to be top of mind, particularly around if your cash is, if there's a risk, with respect to short-term cash forecasting, you need to be very mindful of what your debt covenants are with any loan agreements that you have. It's going to probably include a clause about working capital. And you need to manage those and understand if you're at risk. And if you are, back to having bank relationships, let's work with the bank up front to let them know you're on top of it. Here's what we're doing to mitigate that risk or to turn it around. And then certainly around loan forgiveness, there's this very eager rush to obtain the loans. I sense that these businesses are not equipped to monitor their compliance with the terms. And that's unfortunately where I think many will get caught. They're viewing it as free money up front, but without the appropriate documentation of the absolute use of these funds, you're leaving yourself exposed to, albeit a cheap loan, it's still going to have to be repaid versus forgiven. So it's important to have those mechanisms in place up front to be able to demonstrate the use of those use of funds. And it creates a risk for the business otherwise, right? Now I have a debt on my books and I thought it was, free money. So I hope that was helpful just in framing things out. Therese, should we take a few questions now or do you want to?
Let me just fly through these slides. One of the things I wanted you to comment on, Julie, is the idea of the separate bank account for the PPP loan so that you limit your exposure to audits.
Right.
If you wouldn't mind commenting on that.
Absolutely. Again, a very convenient way to demonstrate that, one, you have prudent fiscal management over these funds coming in from PPP as well as how they're dispersed, is just to go ahead and set up a separate bank account for that. And it's to be maintained simply for paying out those very discrete expenses that are specified as, keeping in compliance with PPP. And with respect to that, then there will be no question in terms of, commingling of funds Or perhaps was that money really used, to pay something else off when it was supposed to be used to keep your people paid? So again, a very practical example. There's not, with existing banking relationships, it really shouldn't be de minimis cost to add another bank account, and just to manage it separately, I think will save you a lot of heartburn.
Oh yeah, anybody that hasn't been through a state or a federal audit, trust me, just set up the separate account.
Just do it. Yeah.
Because they look, if they're going to go into your books, they're going to go into them. So this way it really does shield you. These are frequently asked questions, furlough and layoff. I'm not going to go through them, but they'll be in the presentation, which you can pull down. More questions about the Paycheck Protection Program, loan forgiveness. There are some specifics, and they're covered in here. So we thought, most people in our positions have talked to the banks and gotten this feedback. And then the next slide covers some of the more HR things that you have to be aware of why the CARES Act was there and how much money was put into it. And then I think there's one more. Let's see the last one. Yeah, the last one gets a little bit into how they split up the money. One of the questions, I had another call from a small business yesterday. The big banks were put on hold for 24 to 48 hours so that the smaller community banks could put through loans. And then they get redone this week, meaning today. I think they're allowed to start doing it again. There's the most important thing to know is that the rules change to get the money almost daily. So not who's available for it, but how the banks can get the money to you. That's something that's been really under a microscope. So there'll be more to come on that. And then last but not least, you gotta, workers have rights. And this last page, just read through it. If you have more than 100 employees, you got to give 60 days notice and some of that. So we tried to put some very important information in case you don't have an HR department or you question some of this. We tried to put just some extra reading for you guys to do. We don't need to go through it. But I think right now we will open up for questions, Julie.